as far as China and Russia attacking the U.S., it would cost them not even a ham sandwich to do it. I mean, if they put together $25 billion, that would completely clean out COMEX silver, COMEX gold. Everything would be delivered, and you'd have many contracts standing for delivery that could not be delivered on, and for nothing, with no shots being fired, no bloodshed, the American way of life would be over, because that would be proof that the fractional reserve system is fraudulent.
Yep.
And $25 billion in today's world is nothing. Actually, $25 billion today is, call it 4 or 5 days of U.S. debt accruance. I mean, we're accruing what, $5 billion a day?
Yeah.
Between interest and new borrowings.
Since the late 1990s, analysts have exposed how Western monetary authorities, starting with Robert Rubin's strong dollar doctrine, suppressed gold prices to maintain global financial dominance. Fast forward to 2019, liquidity was already tightening, eerily mirroring today's conditions. Then came the COVID-19 pandemic, a convenient crisis that justified the largest coordinated money-printing effort in history. But instead of fixing systemic flaws, trillions in new debt simply delayed the inevitable reckoning. Today, the debt burden dwarfs 2008 and 2019 levels. We're now at a crossroads: inflate through unprecedented stimulus or face a deflationary spiral. Either way, the outcome leads to rising real-world costs. We're living through a paradox: simultaneous inflation and deflation. Essentials like food, rent, and utilities are soaring in price, yet assets like commercial real estate and vehicles decline in value, especially when measured in gold. In fiat terms, prices may appear stable, but in real terms, purchasing power continues to erode. Gold remains the ultimate benchmark of stability. Meanwhile, silver faces a crisis of its own, a persistent 400 million ounce annual supply deficit. For years, analysts have warned of a looming delivery default on paper contracts. If silver fails, the shock will ripple through the entire derivatives market, shattering global financial confidence.
They started in 1999, and I mean, they were talking about the manipulation of gold, which really took off starting in 96, about 3 years earlier, with Robert Rubin's strong dollar policy. And I mean, they've exposed so much over the years. The community owes a lot to Gata. In my opinion, I think, I believe that we're back to where we were in 2019, in the fall, where liquidity was tightening. Liquidity tightened, and then of course COVID came along, and that was quite convenient, because that gave central banks all over the world cover to print trillions of dollars. So we went through COVID. We had another massive reflation that was created or done with the use of more debt. So the problem in 2019 was way bigger than 2008, 2009. The problem today is way bigger than 2019. We're back to Richard Russell's inflate or die moment. Either they print and borrow, buku amounts of capital of debt, or the system collapses and we have a deflationary spiral. Regardless of whether they reflate or not, we are going to have inflation of the things you need and the things you have, and you're already starting to see that. You can certainly see it in commercial real estate. The things we have are and will deflate. And when I say deflate, not necessarily in dollar terms or euro terms or yen or pound, but in terms of gold. Rock solid money. In real terms, we're going to have deflation of the things we have, and inflation, it's going to cost more to live. The second part of your question was silver. I think it's pretty obvious at this point. I mean, we're looking at what? Probably a 400 million ounce deficit between supply and demand, and it's been that way now for 3 or 4 years. So the final failure to deliver that I've talked about for many years, I think we're right on the precipice of that. I've always said that I thought it would start with silver, immediately spill over to gold, and once you get the gold and silver contracts fail to deliver, that's it for the entire derivatives market, because that market runs on confidence, and a failure to deliver exposes the fraud and will break the confidence. Yeah, I think I'll give my conclusion first and then work my way back to that. The conclusion is there is no white knight this time. Every financial crisis we've had going back to, well, I guess you could say going back to 1973, 74 even, there's always been a white knight that could come in. There's always been a central bank that could step up and lend the money. 2008, 2009, the white knight turned out to be the balance sheets of these various sovereign nations and the central banks themselves. The problem is they've blown their balance sheets up, the treasuries have, and the central banks have blown their balance sheets up. I mean, the Federal Reserve has got a negative equity position right now. The same could be said for Bank of Japan. Same could be said for the European Central Bank. They're all broke. They're all busted. Their balance sheets are in shambles. There is no white knight this time, with the exception, theoretically, they could blow gold to 25,000 an ounce, 50,000 an ounce. The white knight would be the central banks that hold gold, and then their balance sheets get reflated.
Yes.
But that said, $25,000, $50,000 gold completely breaks confidence in the credit markets and breaks confidence in the currency markets. And that's exactly what where we're headed on a global basis, is that this is going to be a currency/credit crisis. And there's going to be a complete rethinking of what the foundation is to the financial markets. Right now, the foundation to the financial markets is debt, primarily U.S. debt that's held on central bank balance sheets. But that is the foundation. And debt, if you want to call it sand, it's a foundation of sand. Whereas gold has a foundation. Gold doesn't go up and down in price. It's the currencies that go up and down, and primarily, long term, all currencies go down, and long term, gold goes up in those currencies. So I think that's my answer, is that there is no white knight this time. The problem is they're going to try to reflate, and like you said, who's going to be the buyer? Because we're already seeing China, we're seeing Japan, we're seeing other nations liquidate treasuries at a time that the U.S. Treasury has the biggest appetite in its history, simply because, well, if for no other reason, because now we're paying $1 trillion a year, over $1 trillion per year in interest alone. So that's a confidence breaker. But at the same time, from a fundamental standpoint, you've got foreign central banks, sovereign treasuries liquidating U.S. treasuries. Who's the buyer? And the buyer ultimately will be the Federal Reserve, and it will be outright in-your-face monetization.
Historically, every financial meltdown had a savior: central banks, governments, or multinational coalitions. But those white knights are gone. The Federal Reserve, Bank of Japan, and European Central Bank are operating with negative equity. They're essentially insolvent. The only theoretical solution is to revalue gold, potentially to $20,000 or $50,000 per ounce, to restore their balance sheets. But that fix would obliterate confidence in fiat currencies. Global trust in credit markets would collapse. We're approaching a new financial reality, one where the dollar is no longer the bedrock of safety. Instead, physical assets, especially gold, are regaining status as the true store of value. The U.S. government now pays over $1 trillion annually in interest, while foreign holders, China, Japan, and others, are dumping U.S. treasuries. With no foreign buyers left, the Federal Reserve becomes the last resort, directly monetizing debt in plain sight. In 2024, U.S. banks were given $5.5 trillion in regulatory relief to buy treasuries, masking the system's fragility. Yet with zero reserve requirements and a fractional reserve system under scrutiny, it wouldn't take much, just $25 billion, to collapse COMEX gold and silver markets. That's less than a week of U.S. debt issuance. October 2022 marked the beginning of the endgame, and gold has only marched upwards since.
You can actually see it with your own eyes this time. And when I say this time, historically, I mean always, the bond market has always followed what the Federal Reserve, the bond, I shouldn't say followed, because the Federal Reserve in some instances follows the credit market. But what happened a year ago was the Federal Reserve lowered interest rates 1 full percentage point. I think it was in 3 cuts. Yet, what happened to market rates? Market rates went up 1 full percentage point. This is the first time in the history of the Federal Reserve, going back 100 plus years to 1913, it's the first time where the Fed acted, but the credit market did the opposite.
Yes.
And that tells you that the Federal Reserve is losing control of the yield curve. On that chart, I think that chart kind of illustrates why they just relaxed regulations on banks, which freed up $5.5 trillion on their balance sheets, because the American banks were not buying treasuries like they had, and this will give them firepower to do it. But I mean, basically, we have a banking system now that has no reserve requirements. As far as China and Russia attacking the U.S., it would cost them not even a ham sandwich to do it. I mean, if they put together $25 billion, that would completely clean out COMEX silver, COMEX gold. Everything would be delivered, and you'd have many contracts standing for delivery that could not be delivered on. And for nothing, with no shots being fired, no bloodshed, the American way of life would be over, because that would be proof that the fractional reserve system is fraudulent.
Yep.
And $25 billion in today's world is nothing. Actually, $25 billion today is, call it 4 or 5 days of U.S. debt accruance. I mean, we're accruing what, $5 billion a day?
Yeah.
Between interest and new borrowings. Yeah, that's when the end game started. Was October of 22, when the $3 billion was sequestered. The rest of the world looked at that and they said, hey, wait a minute. If the U.S. can do that to Russia, they can destroy us. And that changed the mindset of the U.S. Treasury market being the safe haven of the world. And all you got to do is look at a chart on gold, and that tells you the whole story right there. That point forward, gold turned into a tractor in first gear and just kept going and going and going.